Welcome back. On today's video, I want to go over potentially a daily confirmation or a continuation signal. Now, this is for the people that do have 9 to 5s, purely because you don't have time to check the charts on those tiny. So let's say you're looking for a daily point of interest, right? With daily point of interest, and you wait for confirmation in there. If you work a 9 to 5, 9 times out of 10, you can't. And if you do, you're rushing it. It's a smaller picture. You're going to make some mistakes. There's going to be some slippage. There's going to be something that you do that messes it up. Purely if you're trading off your phone, just a higher risk, right? So if you're from the UK and you trade the daily time frames, you can implement this entry slash continuation technique for your trades on the daily time frame. So I'm not going to keep talking about it. Let me just jump into the charts and show you what I mean. Okay, so what you can see on my chart is a daily time frame of New Zealand NZD. And at the bottom, I just got the RSI at the bottom. And on this RSI, we have a 14-minute SMA or EMA, sorry, 14-minute EMA. So pure and simple, what we want to do is, let's just say we're doing it Tory Trade style, right? Tory Trades, obviously you guys probably know of her, and she does trend line breaks. Let's just add her strategy in. We have a trend line to the downside. Let me just delete that. Trend line to the downside. So obviously if we're continuing with the trend, we're going to the downside like this. Boom, boom, boom. Right? Continuing until it breaks, otherwise, and then lets us know. So that this isn't going to be all you need, because you're going to need other factors. This is just one tiny bit of it. This is one clue that you can use to continue to the downside. So what I want to see is, one, let's just say we're using Tory Trade Style. We want a trend line break. Okay, we have a trend line break. But what I'm also seeing, if you have a look at the RSI at the bottom, you can see how the purple line has crossed this moving average here, right? So if I delete it again, you can see we already have some sort of clue that potentially price can go up from here. Clearly, we have had the move here before, but again, that's why you need more than just this one clue. You need multiple clues. You need to build up a story of confluences of what you need, because right now all we're seeing is price respecting this moving average and price making lower lows and lower highs. That's all we've got so far. So this technically means nothing. We need to have something else in place for price, or within price, to tell us what price potentially can do yet. And obviously the next thing after this will be potentially a trend line break, because this could just easily hit this and continue to come to the downside. Or if you want to do it other ways and you want to do supply and demand, you can look at supply and demand as well, see if you're playing in any sort of supply and demand area, etc., right? Hence why I've got this grey box up here, is because this is where I think price may want to go to continue to the downside. Because for me, price wants to continue to the downside. We're respecting, pushing down, come back to where area of supply, pushing down. And now this is my area where I think price can react from. But let's just keep going with this. All right, again, these are daily candles. So if you work a 9 to 5, you can easily do this, because it's only going to take you maybe 15 minutes after work just to have a scan through certain pairs and then see what you like. But what am I seeing here? I'm now seeing a trend line break. I'm also seeing that this purple line has crossed the moving average down here and it's moved away. And what I'm going to do, I'm going to give you loads of examples as well. But I'm just going to do a one-to-one. Why? Purely because it is against the trend. I know the overall trend is bearish, but what I'm seeing now, price is closing above this area, and now this is now clearly above this line. It isn't like a spike up and then spike down. Price is now consolidating and now pushing through. So odds of price at least coming back to the 200 EMA is quite high. And obviously, if I got logical reason where I think price may want to go to first before the overall move to the downside, makes a lot of sense, right? So again, obviously, if I play this out, your daily candles, and there we go. We've hit TP as a one-to-one. Now I know you're saying, "Well, why are you doing a one-to-one for? It's rubbish." But obviously, 2% per trade with a daily time frame, higher win rate. You know, all you need is 4 of these or 5 of these with FTMO, and you've passed phase one. All right, it just takes a few days for it to play out. So let's just keep looking back for examples and different pairs and just see what we can find. Let's go to Aussie NZD. Right, same situation here. Let me just delete something because it's going to get confusing otherwise. But I'm waiting for the same move here. Why? But you zoom out, you can see I'm playing out of an area of supply. I've got a trend line. I'm waiting for a trend line break, and I'm waiting for this purple line to cross below the yellow line, and then I'm going in for a sell. Same thing that happened here. Let's just delete this. Don't want it to get all confusing, but it's the same thing, right? Let's do replay mode. I have my point of interest. Let me zoom out. You can see this is my point of interest, my area of supply, right? I'm potentially looking for sells in this area, but I'm not just going to randomly put a pending on. And obviously, I can't go down to lower time frames and wait for a distribution in this area because I have a 9 to 5, right? What can I do? Well, what I can do is wait for price to, one, obviously respect this area, two, break the trend line, and three, I want the purple line to break below or cross moving average on the RSI, right? So again, do nothing. This is one day. Next day, 10 p.m. at night. Something is happening, but it's not ready yet. Why? Because this purple line hasn't crossed the yellow line yet. Do nothing. Next day. Still do nothing. Now we can do something. Why? Because price is clearly broken the trend line. If I have a look on the 4-hour time frame, it'll probably look prettier. Clearly see we have a trend line break. Go back to the daily. On the daily, we now have this has now crossed over. So that's my go sign. All right. So again, 10 p.m. at night, GMT for the UK, stop loss above the high, a little bit of pad if you want. And again, if you want to just do a 1-to-1, you can. Again, risking 2% per trade. Done. Hit TP. Right? And let's say you wanted to hold this. Let's say you wanted to hold it. Let's say you want to go all the way down here. This is my overall TPL where I think price could go to. What you can do to hold this position is keep holding it until this purple line crosses above this moving average again and just see what happens. Right? So again, do nothing. Do nothing. Do nothing. Do nothing. Do nothing. Well, we've already hit TP, but let's just see how far we can go. Do nothing. Do nothing. And again, we're getting close, potentially. Have a look here. We haven't got a cross yet. It still can reject. Let's just see what happens next. See, got a rejection. Still a rejection. Still pushing lower. Still pushing lower. Still pushing lower. So we're still in this trade, right? So imagine if you're just holding this trade and you're waiting for that line to cross. So far right now, we're floating a 1-to-6 on the daily time frame, right? Let's just target down here. I have no idea how far this is going to go, but so far we're at 1 to almost 9. Doing nothing. Now we got out the trade. We got out the trade. Why? Because price has now crossed down here. So rather than a 1-to-1 or a 1-to-2 or whatever, we got out the trade for a 1-to-5. There you go, on the daily time frame. Something that you can do, that you can monitor, that you can trade during a 9-to-5. So hopefully, guys, that has made a lot of sense. Again, you can't just use this by itself. It needs to be with structure. It needs to be with confluences. It could be with supply and demand. It could be with support and resistance. It could be with trend line breaks. It can be with whatever you want it to be. But just this as a concept for potentially entering a trade, exiting a trade, and holding a trade is very powerful. All right, same thing down here, right? Let me just delete this. And again, let me just delete price. Right, we are in an area of demand. Right, we're not just going to set a pending. We're going to wait for 2 confirmations. Those confirmations are, well, 3 confirmations: area of demand, trend line break, and I want the lines to cross. Okay, sorry for my hiccups. I'm drinking coffee at the same time. Now we have a clue. We have some sort of clue because not only are we coming from an area of demand where we're expecting price to react from and go long from, but also now we have a cross. However, we can't enter in yet because technically we are still bearish on the daily structure because price can still do this, right? We need to go bullish structure-wise and we need to break the trend line. So again, still do nothing. Still doing nothing. Still doing nothing. Still bearish. Okay, what can we see here? Oh, I can see the price has made a lower high, Still respecting my area of demand. We can also see the RSIs make a higher high, higher low. So we have strong bullish divergence. Okay, strong bullish divergence. What else do we have? We clearly have a crossover down here. So we have strong bullish divergence, an area of demand, and clearly a crossover here. Let's wait for one more candle to see if it closes above. Again, these are daily candles. You can do this when you come back from work in the UK. It's going to be like 5, 6 o'clock at night. You might have kids, you got other stuff to do. You want to play golf, want to go gym, want to do whatever you want to do, you can, right? Because this candle isn't going to close until 10 p.m. GMT. You can literally just wait till 10 p.m. GMT, have a look at the charts before you go to bed, place your trade, go to bed, and do nothing, right? One more candle. Right, now we definitely have a confirmation. We have strong bullish divergence. We clearly have a break or crossover of these two lines here. And clearly we have a trend line break. And we're in an area of demand, right? So if you wanted to, again, go long from here, stop loss, logical area below the daily lows. And we could go for clearly a 1-to-1, right? So let's just try this out. See what happens. Again, holding a trade for as long as you want, or wait until these price actions cross over or to a point of interest. Okay, so there's your 1-to-1 hit. Again, that would be 2%. Let's just say you want to target up here, right? Could you expect price to sweep these highs? So let's just drag this across and we'll see how long we can hold this trade for when these cross over again. Okay. Again, still doing nothing. These are days. Days are gone by. All you got to do is check how the candle's closed, and that's it. You do nothing. The hardest thing for you guys to do with this strategy is literally to do nothing. Okay, so there we go. We have hit overall TP at 2.87, but let's just say you want to target up here, and we're only going to get out when these cross over. Still do nothing. Still do nothing. One more. There you go. Now we've had a clear cross. Let's say you got out here and you made 2.4% on that trade, times that by 2. You made 4.8%, just under 5% on that trade. Or you could have got out a longer time ago and you would have made 1-to-1. So 1-to-1 on this trade took 14 days, right? And the 1-to-2 on this trade took 40 days, right? So again, it's going to be a lot harder for you guys to follow this, but obviously when you got a 9 to 5, you literally have no choice but to trade this way because you don't have the luxury of time. Obviously in the lower time frames, you can, but when it's a daily time frame, this is very doable for people with a 9 to 5, especially in the UK. Okay, so that is something you can use with a 9 to 5 in the UK, because I know how hard it is to trade in the UK when you have a 9 to 5 job, okay? You can trade the daily time frame, and with that method, it's very doable because you do nothing until the end of the day anyway. So right before you go to bed, have a quick scan to see where the candle's closed. If it is, place the trade. And as I say, it took 2 weeks to play out for a 1-to-1. If that's 2% risk you put on, you've made 2% in 2 weeks. That's averaging 1% a week. That's absolutely fantastic. Do that once in a month, right? You do 2% in the month. That's great. Do that on a 100k account. You've made 2,000. You keep 1,600. There you go. Now you've basically doubled your salary for the month just by doing one of those trades. You see, it's not sexy, but it's effective. So let me know what you think in the comment box down below. If you want mentorship, that link is down below as well, because it takes a lot more than just simple lines crossing. You do need a whole bigger picture going on rather than just one confluence. You need about 5, I would say, good, strong confluences into why price is doing what it is doing. Like you can use the COT data. But yeah, let me know what you think down below. Love you all. I'll see you on the next one.